All right, hi everybody. Welcome back to the channel, and today we are talking about YieldMax ETFs. Now, I talked about this one briefly in my last video, and that one currently has about 1,300 views. Thank you for everybody tuning into the channel. We just hit 2,000 subscribers. It means a lot, and I really appreciate everybody who is subscribing to the channel and taking a look at what we have to offer. We talk a lot about dividends, cash flow. I just made a video actually on why Rumble outshines YouTube for content creators. I truly believe that YouTube's a fantastic platform, but in terms of monetization, you can get monetized sooner on Rumble, it seems, and also there's a massive opportunity for growth. So obviously YouTube has like 2+ billion users a month, I believe. And then Rumble has like 50 million. That's another story. Go watch that video if you're interested. But we have a lot of stuff on passive income, dividends. Also check out dailyinvestmentadvice.com. We have a lot of information on the markets. We're just posting consistent stuff that I'm interested in primarily because it's a one-man operation right now. So I say we, but it's really my family and I. My wife helps out a little bit with ideas and stuff, and I kind of talk to her because she has that kind of mind to think about these things and certain content ideas and how we can potentially just make this a website for investors to provide education and insights, recommendations on a consistent daily basis. I mean, that's the goal. Sometimes we might be busy, we might miss a day, but if we can help people achieve their investment goals, if you're a dividend investor, growth investor, whatever you're looking for, real estate investment trusts, exchange traded funds, retirement. If you're a beginner to the stock market and real estate, you have no idea what to do. We have all that information, even day trading, swing trading, personal finance, side hustles, all that kind of stuff. Come on over here. And with that being said, I just want to talk about these ETFs that are super high yield in this video because we have such a high dividend yield to the point of 91.25%. And somebody could look at this and say it's absolutely ridiculous. Why would I ever buy something like this? And the risks are substantial because if you look at the performance of these ETFs, and I talked about this yesterday with Izzy, who actually gave me the idea for the original one, which was this one right here is NVDY, is the ticker symbol. I'll pull that one up real quick for you just to show you what type of yields these are generating, because shockingly, this ETF is generating over 100%. But if you look, it was already down 1%. It's tied to NVIDIA's stock price. Well, then this one's tied to Tesla's stock price, right? So TSLY, and what we have here is over the last 5 years. So this actually came out in 2022, so not even the last 5 years. This ETF has sold off from $40 per share to $16 per share. So not even 2 years later, you're looking at a 60% loss on your net asset value. Now, you could look at that and say it's absolutely devastating, but keep in mind your dividends on this ETF have probably been anywhere between 50 and 100%. The dividends they're generating on these, because they use options and because they're using derivatives to try to magnify their returns, there's a lot more risk involved, but there's also the potential that they can pay out these insane monthly dividends. So what we have here is essentially a situation where if we look at the dividend history, for example, of this ETF, TSLY, $12 on an annualized basis is well over $1 per share. If we actually do the math on that, that's just over $1 per share. And that right there tells you that if I buy 10,000 shares of this investment, 10,000 shares would be a ridiculous amount to buy, right? But I'd be getting over $10,000 a month. But how ridiculous would it be to buy 10,000 shares of an ETF like this? Because if I did that, the ETF's at $16.10. And, what we have here is if we bought 10,000 shares, we can invest $160,000 into this ETF theoretically, and it would pay us $10,000 a month. That sounds absolutely insane, but if you think about it, what's the dividend yield right now on this ETF? 74.8%. If we take that number, so the yield is 74.8%, $120,000 a month divided by 12 months. That means you'd be getting over $10,000 a month, and you would only have to invest $161,000. So now the question is, what type of account is this done in? Because if you're making $10,000 a month on an ETF like this, first of all, that's a ridiculous amount in my opinion, unless you're a multimillionaire and this is only a few percentage points of your portfolio to put into an ETF like this. So if you have 5,000 or 10,000, it's the same thing. I'm just using this as a fun example. If somebody has 160 grand laying around in a Roth IRA or whatever it is, and you're looking at passive income for your portfolio, keep in mind, I mean, this is insane. When you look at a dividend yield like this, but also you're losing that money consistently. The net asset value decay, you cannot deny that. That is such a primary consideration with something like this. And what we have here is even going back just to September, all these text messages, going back to September, if we look back at 30 bucks a share, all the way down to July, right, peaking up at $17, $16, we're pretty much selling off consistently. So this ETF, because Tesla has really done bad too, right? Well, let's check it out. How bad has Tesla done? It was down 4% today. But with that being said, Tesla is down 4%. And, you know, the last 6 months, up 14%, down 8% in the last year. Okay, so last 5 years still holding steady. You see the problem, right? Tesla hasn't even done that bad, but this ETF, this new one that we're talking about, not the other one, that was the one we talked about in the previous video, NVDY. That's an ETF that I've talked about with Izzy and I talked about on the channel. And this one right here, you'll see the performance because NVIDIA has done so well. This ETF is kind of following suit a little bit. It's participating in some of those gains, but we have not seen anything yet, especially with the net asset value decay. When NVIDIA sells off 50%, because of the decay of an ETF if Tesla does the same thing, either way, if these stocks sell off 50%, that net asset value will just continue. And I'm trying to get back to the TSLY. Sorry, let me go back to TSLY. And what will happen is you're just going to keep on losing money on your principal. So the question then becomes, can you dollar cost average your way out of it? And so what I mean is if you're buying 100 shares at 25, let's say, of this ETF, when it was trading at $25, as you can see, in 2023, etc., and then you keep on buying shares as it drops, can you keep on averaging down to the point where, let's say your average cost now is $19 a share? You've bought so many shares that now your average cost is 19 bucks, and what you're trying to do is then buy more as the ETF. And also what you have to think about, tax efficiency. How are you going to maximize? Because what if you don't want to withdraw the money right now? What if you don't want the temptation of spending the money? What type of account can we use, like a Roth IRA, to where the taxes allow us to reinvest? So that's this. Then you're getting to a point where it's like, okay, but how do you make that sustainable long term? You know, that's the question. That's the question I have. Like, how do you actually take this, an ETF like this as well, coin? So this is another one of those YieldMax ETFs. And YieldMax has all of these different ETFs. This one's up too since inception. If you look back at 2023, it's still up or around the same net asset value price, I'd say at 20 bucks a share. And it's had some peaks up to 28, 29. So what do you say to an ETF like this if the share price has actually remained steady now for over a year, right? So now we're looking at a situation where it's like, how do we make this work for our portfolio? And how do we reinvest the dividends tax efficiently? That's the key. You have to be tax efficient, in my opinion, because the IRS will get their greedy paws on it. And I hate to say it, but it's like you can have it in an individual brokerage account. I have a portfolio like that. I just started, actually. I made a video about my journey to $1,000 a month with like covered call ETFs. I might actually add this to the basket on that one to try to get there faster and juice the yield. The thing is, unless you have a large sum of money to deal with, I wouldn't worry about investing these larger amounts, like 100 grand into this ETF. We're just having fun in this video. I always try to emphasize that because there could come a day when you are a multimillionaire and you do have a lot of money to invest. And let's say, and I'm not a multimillionaire, I'm on the same journey as you, but if we can consistently invest, right, let's say into a Roth IRA, into income producing assets, such as these ETFs, even if we only put in a little bit of our portfolio, you know, say you have a $50,000 stock market portfolio, you put in $5,000 into ETFs like this, or $2,500 to be very conservative. Let's say no more than 5% of your portfolio, 10% max, depending on your risk tolerance. But then you can also spread it around to individual stocks. You can spread it around to a bunch of different covered call ETFs, and also doing the wheel strategy yourself. So there's a lot of ways to make passive income. That's what I tell people, is there's so many ways. Real estate investment trust, you can do bonds. There's a lot of different funds. And with that being said, guys, I'm getting bombarded with all these different text messages, and I'm going to cut this off Thank you so much for tuning in. I hope you enjoyed this video and learned something. Once again, the ETFs discussed in this video are CONY, CONY. We also have TSLY. All of these are through the same company, YieldMax. And then, of course, we also have the one we discussed in the last video, and that would be NVDY. And this one right here is yielding over 100%, actually. I think we might have gone over that, but just in case, let's go over that real quick. This one, as you can see, is 111%. I just talked about this ETF, and absolutely insane dividend yields. But with that being said, thank you so much for tuning in, guys. God bless, and we'll see you in the next one. Take care.